Hello and welcome back to Closing Bell on the Tuesday, the 2nd of March. I'm going to speak about 3 exciting stocks that everybody's been speaking on Twitter today. And I'm going to start the first one with Rocket. Rocket is on the rise. Yeah, it's on the rise. It's gone up 60 to 70% today on a gradual increase. People just buying in volume on volume. And rumors on the mill are there's a short squeeze going on. Because there's a short float of about 40%. It just attracted Wall Street bets investors coming thinking, is this an opportunity short squeeze these hedge funds again? They are back. The Wall Street bets are back. But however, if you go on the Wall Street bets website, there's a lot of talk about GME and AMC, but not much about the Rocket company itself. So if anybody who can find a real good trade, please leave on a link below, because I'm highly relying on the Twitter information and also the data that I can get on the website. So as you can see today it's going about 60%. The last 4 days almost double, 100%. Okay. And do you know that Rocket also paid dividends? So the short squeeze folks who started shorting at 20 bucks, now they've lost about 100%. And if they hold it until the 8th, that's when the ex-dividend comes in, they have to pay the special dividends as well. Short sellers have to pay dividends to all the long investors. So there's a risk. So will they hold up till the 8th? And remember, with the short squeeze saga, if this short seller starts giving up and starts buying back their shares, it will cause another jump up rise, and this might push the stock even higher. So now it's starting to gain momentum. Are they going to gain the same momentum as they've seen about 3 to 4 weeks ago with GameStop and AMC? We're not sure, but the momentum is starting to catch attention of the radar, especially the likes of CNBC. So we have to wait and see, but it's getting exciting. It might catch on the highlights of every news channel again. But on the other side, UWMC, who's a rival for private loan mortgage companies like Rocket, is also getting the up high rise. They're up about 20% after huge short selling after the IPO about 4 to 5 weeks ago. So this is something to watch and see. I'm quite excited to see again because news is fresh. Now for the second stock that's hot on the radar is Lemonade. However, the earnings came out, it didn't favor them. It dropped to as low as 120, spiked up to almost 130. Now it's back down to as low as 110. Okay, so is it time to buy? Is it not time to buy? Charting analysis. I remember back on the 19th of January, I showed this chart here. 19th of January, I showed this chart here that it was been 140. And I think it was a bit too high back then. I actually sold it out way before that when it was 150. When it dropped to 140, I still think it was too high, even before earnings. And I expect to drop to 120 to 125. And back on 26th of February, I looked at the charts again and I thought it might drop to 120. But furthermore, it might drop even to as low as 110. And guess what? Today, on the 2nd of March, it happened. Second buy trigger, which I think is 110. First buy trigger, if I bought in 120, I rebought back at 110. And I think there's a potential for it to just swing trade for me to go back up to 130, because there are loads of people that bought in 140. That's a good support line there. So it might creep back up. We don't know where it's going to go, whether folks are actually taking profits to push it to 100. So we don't know. So we're setting 110, where potentially it could go back 120, 130. Or it could fall back to the likes of the 99 bucks to 100 bucks per share for Lemonade. And why did it drop? That's a big concern. You know, without going to all the great earnings detail, the reason why Lemonade dropped is one key main reason: the future forecast. I think they had about 60% growth for 2020, which have done absolutely staggeringly well. But then for the 2021 forecast, I think it came out a revenue forecast. They actually presented big, honest, big information out there saying that we'll only achieve a 24.5 to 25% growth revenue for 2020, despite the fact they will be expanding to other countries in Europe. They'll be expanding with new products. But why? Investors are pulling their hair out. So why are you only expecting a lower revenue growth? And now for stock number 3, the exciting SEA Limited. The earnings came out and man, it just blew everybody away. And what makes it even better, the future forecast looks really, really good. So let's go to the earnings really quickly. For the Q4 2020, the bookings were up 111% year on year, okay? The QPUs, 190%. Revenue for their e-commerce sales were 178%. Gross order, 134%. The gaming unit, 112%. And it just goes on. They have just total GAAP revenue up about 100%. They have just basically doubled their revenue business in 2020. Yes, we know it's about COVID-19 and it's a bit of a steroid pump, but still, folks in Southeast Asia are changing the way they shop now. They're not just shopping based on Alibaba, AliExpress. They can find something that's close to them, which is SCA Limited. So they are huge in Taiwan, Indonesia, Thailand, Malaysia. They're really beating everybody to the ground with the great logistic improvement for 2020. And what makes it even better, let me bring this out here. For the guidance for next year, for the full year 2021, we're currently expecting bookings for digital entertainment between 4.3 to 4.5 billion US dollar. Midpoint guidance of 38.1% increase for 2020. Okay, and what makes it even better, the next line is we expect a GAAP revenue for e-commerce between 4.5 billion to 4.7 billion. Midpoint guidance an increase of 112% for 2020. So in 2020, they beat by 100%, but they expect to beat by another 100%. So the compound annualized growth rate will be 100% last year, 100% this year. Wow, what more can you ask from this company? And what makes it even better, when I analyzed SCA Limited back last year, they were making more money revenue on the gaming sector, on the digital business. But now the e-commerce sales revenue is catching up to the digital gaming business. So they've got two running side by side, and they've still got their PayPal equivalent that's still out there trying to chase for more glory. So SCA Limited, I think it's a good winner here. It is worth about $120 billion company. Who knows? It might still be able to double next year and triple the year after. This is what we see from the forecast currently. So for me, if it hits 240, 250, I'm tempted to buy. See if we can average down. But with the current situation, with the sell-off of tech stocks, they might not be in favor. So take advantage as a discount to buy some. Or if you're already owners of SCA Limited, well done. Top at 240 and let the glory grow all the way to 300. I think at the end of this year, at minimum, they will still be a $300 stock. They should be at least a $200 billion company if they're serving so many populous countries in Southeast Asia alone, an area where Amazon themselves failed when it started up in Singapore. Okay, so this is me for the closing bell today. I hope you enjoyed these 3 key stocks that I've been discussing about. Please leave your comment below which one you're more interested, and also please like and subscribe for more future videos, and I hope to see you tomorrow. Okay.
I hope you enjoyed that video. Please like this video and subscribe to the channel. Please press the bell button. Ding dong. Finally, watch the recent video up here.